moved slightly higher on Wednesday. Brent is struggling to hold at $56 per barrel. However, the price may still try to test the area of $58. The ruble is trading in negative territory amid the lack of supporting factors. Crude prices gained support from the industry data on oil inventories. The American Petroleum Institute has reported an unexpected drop in the U.S. oil stockpiles. Now traders will focus on the official report from the U.S. Energy Department. If the EIA confirms the decline in crude supplies, oil will receive a strong upward momentum. At the same time, no big changes are expected in the market. The prices are unlikely to develop a strong uptrend, or at least until the pandemic situation improves and lockdowns are lifted. Brent futures contract with the nearest expiration went above $56 per barrel. Bulls have taken control over the market, but the upward movement is rather slow and may have a short-term nature. It seems like consolidation has started in the energy market. WTI was following a similar trajectory and was trading above $53 per barrel in the day session. Yesterday, both benchmarks closed the trade with mixed results. Brent quotes moved moderately higher, while WTI edged lower. Expectations of quick approval of stimulus measures for the U.S. economy serve as a bullish factor for the oil market. Besides, the World Economic Outlook from the IMF added some optimism as global growth is projected to rise in 2021. In addition, the IMF improved its forecast for the Russian economy. Comments from the OPEC also confirm positive outlook for oil. The alliance expects to see a speedy recovery in the energy market, saying that the fuel demand may increase by almost 6 million barrels per day. Crude prices benefit from the tense geopolitical situation in the Middle East. It was reported that Indonesia seized Iranian and Panamanian crude tankers suspected of carrying illegal fuel. What's more, Riyadh reported an explosion yesterday. A few days before that, Saudi Arabia had intercepted a missile or a drone. These events can be related. Amid higher oil prices, the dollar bears could try to push the rate lower to 74 rubles. It would be a great move for the ruble, as it may rise further against the greenback. However, the ruble slipped into the red after a positive start. As a result, the dollar-ruble pair continues to trade above the level of 75. Political uncertainty in Russia limits the ruble's growth. The overall decline in emerging market currencies put additional pressure on the ruble. Besides, the presidency of Joe Biden may increase political risks for the Russian currency. Still, the ruble is far from devaluation. Today, the dollar-ruble pair is expected to trade in the range between 75 and 74. The US dollar is unlikely to leave the channel of 72-76 in January and February. The first quarter is favorable for the ruble thanks to higher prices and low imports. The expected stimulus package in the US will also support the Russian currency. Today, markets will focus on the Fed's meeting. By the end of the week, the ruble may advance on other supporting factors. Thus, the US currency may be weighed down by the peak of a reporting season in the US. And that's all for now. Thank you for watching and stay tuned.